The note is a legal acknowledgement of a debt. The mortgage is collateral. Prepayment without penalty is allowed unless the mortgage calls for it in the contract. The buyer is liable for the debt in an assumption unless the bank gives that person novation. Remember that novation is a release of liability. Exculpatory clause is a non-recourse provision for borrowers. In other words, the borrower is not responsible personally for the debt. Subordination allows junior liens to take priority over higher positioned liens. The Federal National Mortgage Association, better known as Fannie Mae, was created in 1938 to buy the FHA insured loan. Today, Fannie Mae buys FHA, VA, and conventional loans. The Government National Mortgage Association, Ginnie Mae, was created in 1968 to provide subsidy funding. Works with Fannie Mae in a program called the Tandem Plan. The Federal Home Loan Mortgage Corporation, also known as Freddie Mac, was created in 1970 to buy conventional loans from savings and loans. Today, Freddie Mac buys FHA, VA, and conventional loans. The Federal Housing Administration, FHA, this is a government insurance, and the insurance premium is paid once up front and then monthly as part of the mortgage payment. The qualifying ratios are 31% for your housing expense ratio and 43% for your total obligation ratio. The Veterans Affairs, or the VA, this is a government guarantee. The total obligation ratio is 41%. There is no housing expense ratio. Its guarantees is based on the loan amount. The conventional mortgage has private mortgage insurance on that amount of the loan above the 80% loan to value. Its ratios are 28 and 36. That is 28% housing expense ratio and 36% of your total obligation. A blanket mortgage covers more than one parcel of real estate and requires a release clause to sell individual lots that are covered by that mortgage. The Consumer Credit Protection Act, the Truth in Lending, disclosure of the APR within 3 business days from application. Real Estate Settlement Procedures Act, this is known as RESPA, information booklet and good faith estimate within 3 days of the application, and the buyer can review their settlement statement at least 24 hours prior to closing if requested. Otherwise, it should be delivered on the day of closing. A credit report shows the willingness and attitude to repay a loan. Discount points are prepaid interest paid at closing. The buyer can deduct from the taxable income their points regardless of who pays the points at closing. A point is calculated as 1% of the loan amount. Each point charged increased the lender's yield by 1/8 of 1%. And that's all we have to review for Chapter 12.